My 45 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Tonight's video will talk a bit about the China deal that went down today and why this doesn't matter at all. Let's get into tonight's video. Okay, folks, welcome. It is Wednesday night. We got the CPI report came in, just a slight uptick, everything in line with what it's expected. Trump is running around claiming they got a deal with China, and all of these things happened, and the market goes down. So one of the things that I've been talking about off and on, and we get a little distracted from time to time with all the noise that's around the markets. But the reality is that markets don't care about this stuff. There's so much hype around the tariffs and all of this disaster. We got a 20% drop. Now the markets come back, and I feel like I do anyway, feel deceived. I've talked about the poor messaging. It's more the same out of the Trump administration, is that, it's just like, oh, we've got a deal, and the hand shook. Meanwhile, China has never, ever kept any deal they've ever made. They violated everything. And why is this time going to be different? They got back the student visas. They got, a 55% tariff. Expectations are still for, inflation to come through these tariffs, all of this stuff. And, markets are just flatlined here. We, like I mentioned over the last couple of days, we've been just seeing the market. If we go back 10 days ago, it was high 59s, 58s, mid 59s, and now it's high 59s, low 60s, mid 60s. And, we traded up to 60.94 or 74 yesterday, yesterday meaning Wednesday's action. So we're just not, there's no these things that are coming up are not going to move the needle right now. And this is why I think this is the case, is because nothing's changed with the economy. If you turn on your TV set, all you see is burning Waymos and rioting in the streets. And Saturday, even in our little town here in Arizona, there's supposedly going to be a protest by these folks that are no kings or whatever they are. They're coming to even little towns here to disrupt little bedroom communities like up here. So I think there's 130 cities that they're planning on protesting in. So this is what happens when you let 10 million people into your country, right? But this is the markets are, I think, just numb to anything that's going to come out. There's nothing economically going on. The fact that they have a China deal, what does that really mean? It means nothing, actually, because the economy is exactly how it was yesterday. It's exactly how it was really 3 months ago. Labor market stable, just kind of chugging along. And I've told you, I've been worried. I'm looking at over on my screen here at this chart of the daily S&P that is just literally going flatline. And there's a slight bias to the upside, but that's even starting to dissipate as we come in, toward the, I guess, the mid part of this month and finishing off Q2. So I don't know, folks. I'm hoping, I'm glad to be back on the internet. I was looking forward to being here every day, and it's getting harder and harder. So we're going to have to find something else if we continue like this to distract ourselves from. And, I just, it was kind of interesting when I was writing this Substack last night, as I kind of ended up writing a journey of my life through Federal Reserves. And that's the other thing is, we got to put up with all the jargon coming out of the Fed, and Trump trying to set up a a shadow Fed almost, where this new person that they're going to put in will be over talking the Fed. One of the things that came out of the some of the things I was looking at on the Substack last night is that, the only time the Fed worked was through William McChesney Martin's tenure, which was basically 1950, all the way, as I stated in Substack last night, all the way until I was like 18 years old, right? So it was the whole. I graduated from high school in 1970, so from basically 1950 to 70, he was there, and everything was pretty stable. It was the last time we had a truly independent Fed because Mr. Martin told LBJ and the rest of them to basically pound sand. He did the Fed strategy as it was expected to be. We haven't seen anything like that since then. And the worst Fed chair ever was Arthur Burns, and I've been screaming that since I first got into markets. This guy was terrible. And why? Because basically he was a puppeteer for Nixon, and then the best thing that Jimmy Carter did in his entire tenure was to put Paul Volcker in to go to kill the inflation monster. And I have no idea what kind of messaging that they're going to have, but it's in the end, as I showed in some charts and what I've been kind of going on, I get stuck on these threads sometimes. But we're just seeing the purchasing power of the dollar continue to decline, and they celebrate the 2% number like it's something good. Meanwhile, it's just killing all of us in our purchasing power, and it's pretty amazing actually. So we'll have to put up with all that junk next week, and the Fed talking about how everything they're doing. It's getting very it's interesting. I'm obviously an older man, been around the markets for 45 years, and I don't know if it's just getting old and being cynical, or it's just starting to look like an entire, lack of better words, just that everything is just a basic fraud. It's just one way to get us to think in the ways that we do. And market participants are pretty easily influenced. They always have been, and now we have a group of traders, no offense to anybody, but we have a group of traders now that will respond to anything. There's almost no logic behind some of the ways that we see things that we are getting. So I'll stop with the sounding like my dad when I was a kid, as it's just getting more and more difficult. And I think right now this is probably one of the most difficult moments in U.S. history from the standpoint of just the amount of disruption and I hate to even use not misinformation, just flat out lying, So anyway, I'm really trying to control myself here. So I did a pretty good job, because there were a lot of synapses firing that I would like to say out loud, but I'm not going to. To the markets, we get PPI tomorrow, and we'll start to see maybe some cracks. I don't know. PPI seems to be where it shows up the most. I'm still hung up on this echo bounce, and even though they came in as expected, I think this is going to be the end of this. So I always tell you folks, look for some reason, some fundamental reason. Is there anything that could happen? And I really have taken my eyeball. I used to cover crude oil every day. I'm going to cover crude oil tonight, because there seems to be some things going on in crude that maybe is going to disrupt things. And it's very odd, because the news that we got is that the Saudis were going to increase production by 440,000 barrels per day, and crude oil goes up. So more of what I'm talking about here. You almost want to fade anything that you see on the markets anymore. It just seems to be not a lot of valid comments, not a lot of things that we can hang our hats on. Like I said, the employment review that we got last year, the audit that overstated 800,000 jobs. I don't think that's stopped yet. I think every administration plays games with the BLS, and you have to remember we're depending on we could criticize the Chinese government, but our government's not any different. All of these agencies, seasonally adjusted numbers, all these things. I think I've shared with you folks before. In 1980, I was in Melbourne, Australia, and I had to talk in front of a group of people, and I was going through the government reports back then, and I was like, folks, these are all bogus. None of these are really valid, but yet we make decisions, supposedly make decisions. If you look at the financial media, they're always hyping whatever. They're trying to set this tone from that standpoint. So anyway, let's go ahead. I haven't checked the database yet, but let me check something on the other screen. Just make sure we got everything set up and ready to roll through tonight's video. So it looks like we're done. Let me check one more thing here. And we'll go ahead and go through the database and go through our normal process that we go through every night. Yeah, amazing. Yeah, let's go ahead and check this out. So the database is still getting more traction here, and we've got not a lot. We're slowing down the pace a little bit. We've got about 340 new buys, about 200 sells, so we're at 77.03. And in yesterday's video, I talked about how we're seeing this. Let me just move this over just a little bit here. We're seeing some of these patterns starting to show that we're getting at the end of the cycle of these sector holdings, and that just tells us that we're likely to start seeing some negative rotation, go from 77, maybe get back to 62, 58%, see how the markets are acting there. But everything seems to be, as we go out in the weeks ahead, it looks like we're going to see softening of momentum. I'll show you that in a minute when we go through the S&P. But we're also at the end of the cycle, at least on the short-term database. Now, when I talk about the intermediate, I'll do that on Sunday night. When we talk about that, that's got a different configuration and different effects on how we walk that forward. But the short-term database is definitely getting kind of to a point where we're at the end of the cycle, because we're looking right now. I'm just going to zero in on the days. We're getting right now. Let's see what we got. Consumer non-cyclical is right at 35. There's a couple newbies in here, but we've got transportation, tech, and I think healthcare. Let me just services, technology, and transportation are at the end of their cycles. So we're likely going to just see the market start to come back in a little bit. And like I said, we're going to go through the S&P here in a minute, and there's just nothing there to really look at. So let's just go ahead and cycle over there. So this is the broken record story, and we've had a fair amount of interesting news come out, both employment. Now supposedly we have, I'm doing air quote, a China deal, and the fact is that the China deal is a framework. Xi Jinping and Trump need to sign off on this thing yet. Will they? I don't know. It's another one of these things that's like every so-called deal that we've had so far has been, we've got a deal, they're all handshakes and everybody's going to agree, and maybe there'll be something happen there. And like I said in the opening comments, China's never adhered to any of their deals they've ever done, going back to the time when they got in WTO. They just don't. So somehow it's different, and we're supposed to trust that this deal is real, and there's not going to be more disruption. I think also, as I mentioned in the opening comments, I think market participants are just numb to all this BS that's being poured out left and right from everybody within and outside of the administration, and the news stories are being written. It's just like no one actually cares anymore. And the reflection that we have here on the charts are, in my opinion, actually saying just that. We can go all the way back over here to May 13th, and we're slightly higher. But you look at this pattern, we're just gradually going up this what I call the creepy crawler, but we're looking at momentum falling off here in the next several days. So by the time we get to the end of the week, like I said, we've got PPI coming out tomorrow. Is that going to be a surprise? Don't really have an opinion other than I think over the next 3 to 6 months we'll see inflation increase. Will that be because of tariffs? I'm not sure. It just, I've been talking about it long before Trump even won the election. So, well, that's the rhetoric that we have to deal with, and the background noise. That's it. It's kind of, I just kind of had a flash to one of my old mentors used to always say, every time I think I know where I'm at, they change the background on me. And that's what's happening with the markets right now. The background is just blurry. There's no way, there's nothing certain about anything. So the market's acting just like it should. And maybe we'll finally get some material move if we look at just the algorithms and what they're projecting going out, that it looks like there's some weakness coming. I'm going to flash over for a minute here, just go over to the weekly chart. And weekly chart is showing that V top, that this is going to be the peak this week as far as momentum. And we should start to see over the course of the next 4 to 6 weeks, the forecast is for momentum to go negative, which would mean that the 10-week moving average would be declining. I think that's a little pushing it right now, but I definitely can see us getting back into the range of the 40 and then possibly even the 21-day moving average. And that's telling us where that's at right now. That's at 58, 50, 57, 90, down in that range down there, where we'll see things probably pull back into that range. Like I said, this is pretty significant V top, and we also have PPM 3 on a V. PPM 2 is not. The best ones on all three of those are all got that same slope and peak, and they tend to be a significant event. So I think there's something here from the standpoint at least pulling back into the ranges I just mentioned, but that's about it. And just being where we are right now, there could be one surprise, and you think, well, maybe CPI or PPI could be it. Maybe an announcement of a China deal would be it, and the answer was a yawn, a complete yawn. And the only good part is that the trades off of the data sheets, both of them were good trades yesterday on the S&P. So I'll bring that up for a minute because I think that's somewhat interesting. Is the trades were to buy the breakout entry over 50.76, target 50.72. I think we went to 50.76, so this trade got fulfilled. And then also we had the opportunity to break below 60.24 and have a target of 60.09. The low was 06. So both of these trades last night got hit, and that's good. So this is yesterday's sheet. Let's go to today's sheet, and this. So this is what's happening. We've got all of the PPMs. I'll start there. These green boxes. PPM 1 is in maintenance mode above 0.15. PPM 2 is neutral. ppm3 is a trend plus, and that is tracking the 40-day moving average, and that's what I was just talking about, where we would pull back to. So pull back to there would be your best buy the dip area, which is, yeah, that right now, let's see, 59.48 would be that number, and the 40-day is 57.66. They're at the bottom here of the sheets. So let's just look at the range projections for today. R1, S1, again, very reasonably low volatility here, and this is 60-40 and really narrow 60-15. With the news coming out, I would look for expansion 60 even, and then R2 is 55. But we're stuck in that range that we're just, it just won't get out of the range. The good news, if you know that, a couple things, is you know how to play the range. You buy low, sell high, right? So that's what these trade recommendations are telling us right now. Let's go through those. Is entry break. This is a S1 bounce trade, 60-16 to that 40, which would be right at R2. Put a stop at 60-10 on the fade trade. Then if you get to 60-40, if it comes there early, you can fade that trade. And so make sure you note these, because I won't have these sheets out until the updated sheets until later, maybe few hours before the U.S. Open. I typically get this stuff out between 5 a.m. and 6 a.m. Eastern time every night is when the newsletter comes out. And if you don't get the newsletter, kendallreport.substack.com, $8 a month, free trial for 7 days. You can get an annual subscription for $80. I think it's one of the best bargains out there. Just these trades here yesterday would have traded for several years, okay, out of one sheet. So you get these, get 8 trade recommendations every day off of the sheets. Anyway, yeah, I thought that was somewhat interesting, at least how everything has set up. So let's go back, and this is weekly. I'm going to go to the NASDAQ here just so we can get through and move on. Like I said, we'll do crude oil here in a minute. But this is the weekly NASDAQ. Same kind of V formation. I mean, they're identical. And I always tell you that, NASDAQ and the S&P are cousins. They have a lot of the same constituents on the top end of the index, and it's very heavily weighted. So let's go to the daily, just get a feel for. I mean, there's just nothing here, folks. I'm the only thing that we're seeing is we are seeing a bit of a reversal pattern yesterday, minor reversal, not an outside bar, but we're coming down to challenge this 10 and 21 level. And I discussed this a couple of nights ago. I just want to bring this up again, is what we're really, when you see these moving averages start to narrow together, I'll just show you one over here. This where they got very similar in a range where they squeeze down. This is where usually turning points happen. And we're definitely sitting here right now, coming into one of those points in time where we're going to see this. And what we see on the algos, that's being more forecast as we come into Monday of next week. So toward the end of the week, maybe we get some stuff. Folks are probably going to take some protection before the Fed meeting. There's all kinds of potential things that would cause maybe a minor pullback. And then when we get into Fed talk next week, we'll start to take a look at, I'll go in more depth, at least my thoughts on the Fed and what they're likely not to do and why they're not going to do it. That's really, I think we're still stuck there, and I mentioned that, and I think a couple of nights ago I mentioned that. But this is what we're dealing with, folks. Just a very narrow contracting volatility everything's squeezing down. Typically, when it squeezes, we get a reaction to the downside, probably about 70% of the time. So there's high probabilities of a move down, once again, down to the 40, in the case of the NASDAQ, to the 40, maybe to the 200-day again. That's about it. It's not a big rollover being forecasted. The patterns that are out there, you're really squeezing it down. I went through the longer term aspects of the markets back when we went through the long term stuff in the beginning of the month. I'll do that again at the end of this month and beginning of next month. We'll be coming into Q3, and I continue to focus everybody on that Q3 element. I have been impressed that our database on intermediate has gotten up to 48%. That's reasonable foundation for the markets to stay at least stable. That's what's telling me there's not a lot of probabilities for a big decline or anything like that happening at this point. So that's the setup as we see it. All right. Let's go ahead and take a quick look at the treasuries for just a minute. This is pretty much doing what I've been telling you is going to happen. We're going to come back into that 440 range on the 10-year, maybe down to 430 extreme, 435. We did see it pull back a little bit here. We got 441 was the low and the close there. We printed once again up to 451. And I think we're going to start to see sub 440, 435, maybe 430 range on the downside. All it's doing is coming into these moving averages, and the 430 level would be a move back to the 200-day on the daily 10-year. So not a lot here. Just want to stay in touch with what's going on here so we don't lose track of that. All right, so let's move on and go to crude oil. I said I haven't really followed this as closely as I used to, but we're trading right up. Let me blow this up so you can see it. We traded up. We got an RTX sell signal. This is a daily. Just want to make sure I had it right. And we're seeing the range where the forecast is staying within the market grid range, but we see these big trend forecasts for crude oil. And if we look up here, we're looking at getting back and testing $70, maybe getting a bit higher. But this is where things get interesting. And like I said, we just had reports that the Saudis are going to pump something like 440,000 gallons, and I don't know where that is, but it's not being reflected in market sentiment. So let me just bring this up just a bit so we can look at the weekly. Weekly has got some decent momentum building. We also have some fib targets on the upside. We're satisfying fib target 1, which is right at this on the right-hand side here, 69.36, 74.80, and 78. So we're talking about getting back up into this range where we could see a test of the 200-week moving average right now, and that right now is 79.80. So there's a good chance that these fib targets are going to move us up into that range, and when you listen to the news, you're thinking, well, oh, this is great. They're going to pump more oil. We're going to get lower prices. And then the opposite happens. The announcement happens and the markets go up. So it's pretty typical. Like I said, those are the things we're hearing. And maybe that's not what's happening when we get into the real world. But the algos and everything are suggesting that into mid-July we should see higher prices. Is that going to be enough to trigger literally a 0.2 increase on PPI and the CPI next month? Maybe maybe that'll be enough to do it. I'm not sure. Will tariffs actually flow in, and we'll actually see some net effect on prices out in the economy? Those are all unknowns. I don't know. I think we have to kind of wait and see the data. And even if we do get a bump, we already know that most of the tariff bumps are going to be kind of a one-time bump, but it's going to take a while to filter through. So just the fact that tariffs kick in, it might take 3-6 months to filter this stuff in. So maybe that's what I've been talking about for some time, and just looking at the technicals and the quantitative, trying to figure out where the next level is going to be. So nothing drastic, but definitely upside prices coming on crude, and this should set the tone, I think, for maybe things to be considered. And like I said, I will start. This is Wednesday night. We have one more broadcast for this week. On Sunday night, I'll kick heavy into the Fed as we come into the Fed meeting and what the expectations are. So we'll go ahead and cover gold as we usually do. This is weekly gold. Nothing's changed there since yesterday. Let's go to daily to see. See, gold is, we've got that similar, we still have that minor uptrend going, and we're flowing along. Really the main demand line is the 40, but we even have something even bigger happening, what I was talking to you about in the indices, which are that we've got not only the 1021, but we have all of the averages coming into almost into one band here. We're looking at, let's just see what these ranges are. Roughly the 40, we're around 33.27, and then the 10 is at around 33. Let's just get some exact numbers here. Yeah, so 33.20, 33.24 is the 21 and the 40, and then we get down to 33.65 will be the upper range. So it looks to me that we're just going to see a continuation of this pattern just kind of flowing in here. Once again, dog days of summer, no VIG, nothing's happening. I guess when we all fall asleep, something will happen. But I think it looks to me that we're going to finish off this quarter. The only warning that we need to be aware of as we get, we're mid-month, so as we get toward the end of June, then we can start to expect maybe some kind of window dressing, maybe folks repositioning for the second half of the year. And we'll have the Fed meeting behind us as well. So we'll see what kind of noise comes out of that. I've become pretty skeptical of what's going on here from that standpoint. All right, so let's go ahead and do Bitcoin. I think I'll see what you folks are chatting about, and possibly we can go through a couple other things. We'll just see here. Bitcoin kind of rebounded off of these moving averages, come back up. We got another right shoulder. It doesn't look terrible, but it does look like similar to what the risk assets are looking like, is that momentum's going to fade as we come into the end of this month and head into the 1st of July. So everything's just in the doldrums here. I mean, what's going to trigger a big run in Bitcoin right now? Nothing, right? I don't know of any possible events that would do that. Maybe there's a surprise, but everything, folks, I hate to be the bearer of how boring things are, but everything's locked into these ranges, and the forecasts are across the board because of the moving averages. So when you do this machine learning, it's looking back on a coefficient of 150 days, and this is what we get from this, as we're just seeing this type of action. I want to look at something, and I'm a little concerned. Yeah, I did do something. I want to change these coefficients. I remember we were looking at something, and I changed the coefficients here, so I'm putting them back on 150. So if you have the indicators, uh, this 150 is the default setting. I moved it back to 50. We were looking, I think it was Bitcoin the other day. I just realized when I was looking at this that we're going to have, okay. All right, we should be, yeah, we're back to settings. And it's possible I changed all this stuff up here too. I did not. Okay, good. So I just want to make sure the settings are right. So if you have the indicators, typically we get the settings for these algorithms are 150 look back. So what I was about to say, when you start looking back, it picks up the volatility and forecasts some of that volatility. And typically I run them out 50 days, but the reality is 3 to 5 days is about all the benefits you're going to get from that. So, yeah, pretty quiet day here. So let's go ahead and yeah, yeah, rising wedge on S&P, Roger. Yeah, uh, yeah. As I've been saying, if we do print a new high, then you get a rejection. You're not going to follow through here. Um, so, Michael, I'm going to ask you just a favor instead of promoting your. We used to have guys on the trading floor that would do this. They promote their trades. Um, I would appreciate if you would talk about things on this timeline that are about what I'm talking about. That's the point of having this, not for you to talk about ACI and all that. So appreciate you coming, but it's a little self-promotion, and it always irritates me. Pretty much all of the um, yeah, just looking here. Yeah, and Ukraine TV, you're right. Ukraino, Ukrainio, I'll get it right. Yeah, so very bad time um, for option traders. And but what I've been talking about, if you go back to where we were before option volatility and everything collapsed, that's what I was telling you to do. It's these straddles and SPY and S&P futures, whatever ESs. You want to straddle this market, so it's not going out there. So yeah. Anyway, um, it's only 38 minutes in, but not a lot of chatter, and pretty low volume here. So I would just go ahead and come up for some final comments. And I think as we come into PPI tomorrow, we're not going to have anything but more of the same. I quoted one of my old mentors last night, said, expect more of the same until they show you something different. And man, we've been stuck for a month now into more of the same. So that is pretty much it. Yeah, I would say if you want a ghostwriter, I would call, all you need is Claude or ChatGPT. Ghostwriters are dead, I think. So anyway, I'm going to call it quits here, folks. Appreciate everybody coming. See you tomorrow, same time, same station. Have a great evening. Good day trading tomorrow. Thanks for the super chat. Appreciate it. Yeah, this is pretty much a macro channel. Michael, just so you know, we don't do a lot of investment type stuff from that standpoint. If you want that, get our software. Covers 14,000 symbols, anything and everything. A lot of in-depth stuff there. Good luck.